Welcome back to USA Fans. We need to talk. I want you to listen carefully because what we're discussing today is not ordinary currency chatter. It's not something to take lightly. In this space, there are moments when noise dominates the conversation. Hype, rumors, speculation. And then, there are moments when the signals quietly change behind the scenes. Right now, we are in one of those moments. Tier 4B has entered the conversation again, and when Tier 4B appears, it immediately changes the level of seriousness surrounding the Iraqi Dinar and the Vietnamese Dong. For many of you watching, this journey has been long. Some of you have followed the IQD story for more than a decade. Others joined later, learning as you went, navigating waves of optimism, disappointment, skepticism, and renewed hope. Over the years, you've heard claims, predictions, and timelines that never materialized. That history is exactly why today's discussion matters. This is not about hype. This is not about sensational headlines. This is about understanding where the financial system appears to be positioning itself right now. The question everyone is asking is simple but powerful. Are IQD and VND payments finally about to start? To answer that, we need to slow down and look at what Tier 4B actually represents and why its activation is taken so seriously by people who understand how large financial systems operate. Tier 4B is not the beginning of a process. It is the final staging area before execution. It is the point where planning is finished and preparation becomes operational. When a system reaches Tier 4B, banks are no longer debating whether something might happen. Instead, they are preparing for how it will happen. These phases include critical steps: validating internal rate visibility, confirming liquidity channels, testing exchange infrastructure under realistic conditions, and ensuring compliance mechanisms are fully in place. These steps are expensive, they are time-consuming, and they are completely unnecessary unless institutions expect real activity. That is why Tier 4B is so significant. Right now, we are observing multiple indicators that align with this phase. Banking systems are undergoing back-end updates, exchange platforms are being stress-tested, payment rails are being checked for volume handling, internal processes related to rate verification are being discussed quietly. These are not actions taken for speculation. They are actions taken for readiness. And readiness is the foundation of any large-scale financial movement. For Iraqi Dinar holders, this moment carries special weight. The IQD has been tied for years to Iraq's rebuilding efforts, monetary reform discussions, oil revenue stabilization, and international banking reintegration. For a long time, the question wasn't just about value, but about whether the global system would ever be ready to process dinar exchanges on a meaningful scale. Tier 4B movements suggest that the system may now be capable of doing exactly that. The Vietnamese Dong is also part of this conversation, and that's important. Vietnam's economy has grown steadily, supported by manufacturing, exports, and expanding international trade relationships. When VND appears alongside IQD in Tier 4B level discussions, it signals that multiple currencies are being positioned simultaneously. That kind of alignment usually points to coordinated system readiness rather than isolated events. It's crucial to understand that Tier 4B does not mean instant payouts. It does not mean everyone wakes up tomorrow with exchanges complete. What it means is that the system is standing at the edge. It means banks are prepared to process transactions once authorization is given. Historically, when financial systems reach this stage, the remaining timeline tends to compress. Instead of years, the wait is often measured in days or weeks. That is why preparation matters right now. Preparation does not mean panic. It does not mean rushing to make decisions without information. Preparation means ensuring your holdings are secure, your documentation is organized, and your banking relationships are current. For larger holders, enhanced verification should be expected. This is standard in high-value financial activity and is designed to protect both the holder and the institution. There is also a psychological element to this moment that cannot be ignored. Many of you have endured years of doubt, both internal and external. Seeing Tier 4B discussed seriously is not just technical confirmation, it is emotional validation. It suggests that patience may finally be aligning with opportunity. But this is also the moment when discipline matters more than excitement. As attention increases, so does the risk of misinformation and scams. Any promise of guaranteed rates, early access, or private exchange opportunities should be treated with extreme caution. Legitimate processes operate through regulated banks and official financial channels. Calm, informed decision-making is your strongest asset during times like this. This is not just a personal event for holders. When large-scale currency processing begins, global markets notice, liquidity shifts, exchange dynamics adjust, and investor sentiment responds. That is why Tier 4B movement is watched internationally, not just within dinar communities. The implications extend beyond individual gains and into broader financial behavior. As we move forward, the most important thing you can do is stay informed, stay grounded, and stay patient. Tier 4B does not guarantee outcomes, but it confirms readiness. And readiness is something we have not seen at this level in a very long time. As we continue, it's important to understand why readiness inside the financial system matters more than public headlines ever do. Most major financial movements do not begin with announcements. They begin quietly, internally, with systems being aligned, tested, and synchronized. By the time the public hears about it, the real work is already done. That is why Tier 4B is so critical. It represents that internal phase where institutions are no longer theorizing, but actively preparing for execution. For IQD and VND holders, this is where the conversation shifts from if to how. How will exchanges be handled? How will banks manage volume? How will compliance be enforced? These questions only become relevant when systems expect real participation, and that's exactly what appears to be happening now. Infrastructure readiness suggests that institutions are positioning themselves to handle legitimate holders through regulated channels, not experimental scenarios. Now let's talk more specifically about what the exchange process could look like if Tier 4B moves forward into activation. In most structured financial releases, exchanges do not happen all at once. They are staged, controlled, and monitored carefully. This helps banks manage liquidity, security, and compliance while ensuring the integrity of the process. Some holders may be processed earlier, others later, depending on verification requirements and transaction size. That is normal and expected. Documentation becomes extremely important at this stage. Proof of ownership, source verification, identity confirmation, and banking compliance checks are standard in high-value financial transactions. These steps are not barriers, they are safeguards. They protect both the holder and the institution. Anyone preparing now by organizing records and ensuring accuracy will reduce friction later. Another point that deserves attention is emotional decision-making. Moments like this can trigger excitement, anxiety, and urgency. That combination can lead to mistakes. The smartest holders are not the fastest, they are the most prepared and the most disciplined. Acting calmly, verifying information, and avoiding impulsive moves can make a significant difference in outcomes. We also need to address expectations realistically. Tier 4B readiness does not guarantee instant wealth or guaranteed results. It means opportunities approaching. The outcome still depends on execution, compliance, timing, and individual decision-making. Understanding that distinction is essential. Those who remain grounded tend to navigate these transitions far more successfully than those driven by emotion. From a broader perspective, this phase matters because it represents confidence in the system itself. Banks do not commit resources to readiness unless they trust the underlying process. That trust reflects months or years of behind-the-scenes coordination, policy alignment, and regulatory approval. When Tier 4B appears, it signals that those layers are converging internationally. This is why observers are paying attention. Currency movement at this level can influence regional liquidity, trading behavior, and investor positioning. For those who have been waiting quietly, sometimes doubting whether this journey would ever reach this point, it's worth acknowledging how far things have come. Tier 4B represents proximity. It represents alignment. It represents readiness. That does not mean rushing. It means recognizing the moment for what it is and responding wisely. As we move forward, information discipline is crucial. Not every update deserves attention. Not every voice deserves trust. Focus on patterns, not promises. Watch systems, not speculation. And remember that legitimate processes are rarely loud before they are active. As we move deeper into this discussion, timing becomes the issue everyone wants clarity on, and understandably so. After years of waiting, patience wears thin, and every signal feels amplified. But timing in financial systems rarely follows emotional expectations. It follows readiness, authorization, and control. Tier 4B exists precisely because large-scale releases